It's about that time of day again. Welcome back to your Nightly Newsletter, boys and girls. Joseph James here. It's Wednesday evening, August the 10th, 2016. Boy, oh boy, we're getting some incredible trading opportunities this week. And today's big price moves are setting us up for yet another big session tomorrow. Crude oil, S&P, and gold are bearish while the euro is bullish, going into a highly anticipated Thursday's trading session. Got another great newsletter for you guys. We got tons of opportunity going into tomorrow's session. But you know how we roll. Before we jump into these charts here and put together this strategy for tomorrow, I want to remind you the only place to watch the full-length version of this newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link. Come join me on the blog at Sideways Markets to watch the full-length version of our nightly newsletter. While you're here, don't forget to grab your free pass. Come out and join me as a guest in our trade room this week. Grab your free pass if you're not an advanced member here at School of Trade. Lower left-hand corner, don't forget to join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Below the video tonight, you can download all the charts that you see me using in tonight's video. Nice and easy. That way you'll have these charts ready for your day tomorrow. And as I always remind you guys, don't forget, you're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. Join the trial membership on the right-hand side of the blog, and I'm always standing by 24/7, 365 if you have any questions along the way. Boy, it's been an incredible week. It's been a great month of August. Hope you guys are doing well out there learning and earning with us. It's been a really, really good week in our chat room with all of our students and, of course, our live trade room, which opens up every morning at 8 o'clock Eastern Time. Let's take a look at the charts, take a look at the schedule for tonight and tomorrow. Then we'll jump into those charts and put together the strategy. We have no major news coming out of the Asian session overnight. Nothing to worry about here on Wednesday evening. We get a real minor news report from our good friends, the Kiwis down under, and, of course, we got some small news tomorrow morning. Really, all the major news tomorrow is going to be in the U.S. morning session. We got jobless claims and import-export prices. Got some minor natty gas news before we have some big news coming from the Chinese tomorrow night at 10 p.m. Eastern Time. So just a little bit of minor news here tonight. Nothing I'm going to worry too much about. Some minor news tomorrow from our friends in Italy. That shouldn't move the needle too much here tomorrow, but we should be seeing a good reaction to the jobless claims report tomorrow morning at 8:30. And, of course, import prices will kind of piggyback off of that. That's the only news we're going to worry about tomorrow. And, of course, I think all eyes and ears will be pinned to tomorrow night's news, right, from China regarding industrial production and retail sales. Those are always going to move the needle, right, whenever we get those major Red Star News events out of China. So look for that tomorrow night on the newsletter. But for tomorrow, relatively wide open spaces tomorrow, with the exception of that 8:30 a.m. news from the jobless claims. So let's jump right into it here. We got crude oil, S&P, gold, and of course we can't forget about the euro. Crude oil is bearish and trying to finish rotation down to the lows of a spiking channel. Sellers have control and will be looking for pullbacks to falling resistance levels overhead, as well as traps and buyer failures above those resistance levels until they reach their target at the measured move, or until the buyers can successfully take control in the opposite direction. Buyers are nowhere to be found right now. Nobody can make money as a buyer right now in this type of market. Buyers are nowhere to be found right now, so they need to be patient and wait for the sellers to either reach their target or get a strong push back above that moving average, hold a successful pullback to the moving average, and then, of course, their target will be up around that 42.37 to 42.64 area waiting overhead. As we can see here, this is obviously a bear market here right now. Ever since that inventory number came out this morning, this thing just almost like a rock had been tied to it. Beautiful bull trend in the beginning of the session, too. It was a great bull trend going higher up until about 10:30, and then the bottom just fell out of it into a bear spike and channel. Now, this is a spike and channel that it's so large. The size of that channel is so large that the correction zone is all the way back up at 42.80. So I'm not even going to bother with the correction zone. By the time we get all the way back up here, it's going to be very, very unlikely, right, that you still got some sellers hanging around there right now. So we'll expect to see a little bit shallower retracement, right, than, of course, your typical spike and channel. With this chart you see here this evening, we're getting good separation from the moving average, lower lows, lower highs, right? If you're going to be a seller right now, really right now, the sellers are looking for a target down to finish off rotation to the low of this channel, right? That, of course, is the short-term objective, to get down to the low of that channel. But we have to be honest here, that triple measured move has a big old bullseye on it right now, down around that big round number at $41 a barrel. Get a couple targets on the way down, right? Double down target going to be at 41.35. But again, I think all the bears here will be hunting for that 41.09, and we'll probably see it touch that $41 a barrel, that big round number, right before, at least until we can get the buyers, right, to get their act together here. So what are we looking here for a bear? Well, the moving average, of course, is always going to be an interesting spot there for the bears. Bears looking for pullback trades or retracement trades, right? Pulling back to that moving average. As the price goes, if the price makes it above the moving average, right, sellers will be looking for those buyers to fail, right, as this market goes, again, back above areas of resistance. Sellers will be looking for buyers to fail. So as this market keeps going lower here, sellers are looking for retracements back to the moving average. And don't forget, as an advanced member, we talk about all the appropriate setups and entry triggers that we use for pullbacks, right? There is a method to our madness, right? We're not just blindly selling the pullback to the moving average. We cover that, of course, in our advanced membership here at School of Trade. So assuming the market pulls back eventually here, that's where the most reliable trades will come for the bears. We're looking for that pullback to the moving average. And of course, don't forget, we oftentimes see profit taking in a bear market. And with that profit taking, price will slip back above that moving average, looking for those buyers to try and fail, right, for that move right back down. On the more aggressive side, strength trades on the way down will work, but you just want to be careful not to sell into the low of that channel with any strength trades right now. So assuming this market keeps tumbling lower, strength trades, if you're a student of mine, you know what I'm talking about. Strength trades, of course, looking for consecutive bearish candles, and then, of course, selling the close, right, of those green candles. Just want to make sure you don't do that into these areas of support below. The most reliable trade, of course, will come during a pullback or a retracement, if you will. Now, what if you want to be a buyer right now? Well, remember real quick here is that we assume that any real move higher right now up off these lows will be seen as a great selling opportunity for long-term sellers. So buyers need to hold a pullback here. If they can't hold that pullback, don't forget that will be a selling opportunity right back down for those bears. So buyers, the only real option you have right now is going to be to get a nice, and I mean nice, strong push above, hold that pullback, and then of course your target is going to be right about here, right about that 42.37, this whole battle zone here overhead. And ultimately we talked about what the sellers are looking for, but really what the buyers are going to be looking for here. Here's one example of it, right? Nice strong spike higher, hold the pullback. That should give the buyers the green light they need, right? At least the confidence they need to try to make a run up into that battle zone. Once we get up into that battle zone, this is where we start getting into some long-term sellers. This is also where buyers will need to get a break higher, hold the pullback there, right? Get above the battle zone and hold that pullback, right? That's where those buyers will be looking for it. So either get to it quickly, be aware buying into the battle zone, 42.37, 42.64, and then again, look to get back above the battle zone, hold that pullback, and of course, a target for the buyers will be up at that 43.39. Now, back it up quickly here, though. Back it up, because what may also happen is we also may not see these buyers able to get through it. This is where the sellers will be looking for an opportunity to take this price right back down again. Remember though, if we do end up all the way up to that battle zone, remember now it will be a short-term bull market at that point. And so the most aggressive trade for the bears, of course, again, if the buyers hold a pullback, right, they'll get a few short-term opportunities up into the resistance area, up into this battle zone as I keep referring to. At that point now, it's a bull market, at least in the short term. And so being a seller, you've got really two options here. First option is going to be buyer failure. That will be the most aggressive. The next option will be a continuation, just like the buyers need to get on their end. So first opportunity here for the sellers coming back down will be the buyer failure inside the battle zone. And then remember, the most reliable trade will come if they can hold that pullback, just like the buyers have to hold their pullback, right, to take this price higher. And of course, the target is back down, right, back down to that low. Again, as the price goes lower, just be careful not to sell low. Wait for the pullback, right, and then look for it to go lower from there. If it sneaks above the moving average, don't forget, buyer failure back down. And again, buyers careful here. Want to see a real strong pullback hold, right, if you want to have the green light here, right, to be a buyer here in the short term. It's either that or we got to wait to see price finish off that triple measured move, a possible double overshoot for an aggressive buy. But really, again, really the best thing you're going to look for here, even if we get that final target fill, would be to get back above that moving average, hold that pullback, right, and then look for it to go in the opposite direction. This should be pretty easy here for these bears, but we never know until we see it. Again, nobody really makes any money on the buy side right now, so it's all bears, right? Sellers are selling, buyers are selling. Until we can get some proof on the buy side right now, then we'll start seeing these bulls re-enter this market. So don't try to be a hero tomorrow and try to buy into this move lower, because there ain't no way of telling when this nosedive is going to pull up. Even the S&P is bearish and appears to be hunting for stops before it attempts a retest of the lows tomorrow. Sellers have control and will be looking for buyer failures up at resistance levels overhead, or a successful breakout pullback below the rising support trend line for a target back to the lows tomorrow. The overshoot of the channel is giving the bulls some breathing room and a window of opportunity to grab a pullback on the way up to the battle zone, and then again, if they can hold above that zone with a target back to the high of day. This is a very similar situation we saw in crude oil. It's obviously a bear market. We have a bear channel on the way down. We saw this on gold today as well, and of course, I'm going to point this out on the S&P. I'll also point it out on gold. The market kind of tumbled really, not unexpectedly, but it just kind of whoops and kind of slipped and fell out of bed there. I would imagine there are a lot of sellers that would love to get this price right back around that 75 area to sell it right back down again. At the same time, you'll notice here we have a measured correction coming off of that low, right? It's a measured move going against the trend. I call it a measured correction. And look where that puts us. It puts us right about that prior swing, which also hasn't been, right? It's also a lonely old swing there that hasn't been tested yet either. What I'm assuming right now is I'm assuming there are a bunch of stops waiting to be filled here, right? These are sellers who have their protective stops to lock in profit. There are also buyers who are foolishly trying to put a buy stop there to buy a break higher. And I would imagine, right, remember this is the S&P now, unlike crude oil, the S&P will have major fund managers participating to hedge, right, for their clients' accounts, right? You're not going to, of course, invest long-term in the futures markets, but they're used as hedging tools, and the S&P is a great tool to hedge against exposure in the stock market, right? So, of course, we assume there are some big funds out there that are most likely waiting for this market to pull back up so they can try to leverage that statistical reliability, right, that is following the long-term trend. So right now, if you're a seller right now, really the only thing you got to worry about, and we have one of these on gold as well, really the only thing you got to worry about right now is this rising support trend line. Whenever we have a rising support trend line like this in a bear market, you have to assume professionals are not going, well, let me back up. We have to assume that short-term professionals are not going to want to sell into that area of support. Long-term sellers will, because they'll just keep selling more as the price goes higher. In terms of short-term traders, though, really there's only really two ways to do this if you're a short-term trader. The first way is going to be up inside the battle zone, a buyer failure to sell so that you have enough room to take at least a partial profit target before you get to that rising support. Or you want to see a breakout pullback and actually use that support.